right, we're back. Thank you again, Administrator Abby. I think that really sets up this conversation really well, where we have got four really key executives in the energy sector who are wrestling with these challenges, the uncertainty around electricity demand, how it's changing market dynamics, and ultimately how it's shifting their doing business in this sector. So I'm really pleased to have this group of four folks before us, and I'll do some quick intros here before we dive right into the discussion. So we have Marissa Buchanan, who's Senior Vice President of Strategic Corporates and Partnerships at BP. Sasha Mackler, Senior Vice President and Global Head of Strategic Policy at ExxonMobil Low Carbon Strategies. David Sewell, President and CEO of Solstice Advanced Materials. And last but not least, Pete Sheffield, Chief Sustainability Officer and Vice President of External Affairs at Enbridge. I want to get us started right off the bat and ask each of you how this moment has been changing how you all have been approaching business development, how you are formalizing new partnerships, and you're wrestling with rising demand. And Marissa, maybe we'll start with you.
Yeah, sure. Thanks, Jeremy, and thanks to the Atlantic Council for hosting this panel. It's great to be here and talk about this topic at such a complex and interesting time. So just for a little bit of context, hopefully you all know BP, but we are a global integrated energy company. So we produce, refine, supply, and ship fuels from all over the world to a diverse range of customers. And I lead a team that proactively works to grow and protect value with a range of different customers, large complex customers with complex energy needs. So that ranges everything from traditional fuels to renewable fuels to electricity and the like. So it gives, I think, me and my team a really interesting perspective on which to view the current energy dynamics and what we're seeing in terms of changing energy demand, but also supply. So look, I think, and we've heard many panels over the course of the last 2 days. I think fair to say energy demand is definitely rising. Certainly, I think the big difference here now is the shift in electricity around the world, in the US, but also Asia, Europe, et cetera. What I think is interesting now is for us to think about how we actually mobilize the supply to meet that demand and what that looks like in markets like the US as well as other markets. And I think one of the things that we're really seeing is that, geopolitical events, call it, say, over the last 5 years, including over the last few months, have really, I think, brought this to a head for many companies where, a number of years ago, companies were solving principally for decarbonization. It's not that they're not solving for decarbonization anymore, but the things that they are having to solve for have gotten a lot more complex. So this is something we describe as a real optimization challenge. So it's how do you get your energy today? How do you guarantee reliable supplies in the future? How do you manage things like volatility? How do you think about cost and affordability and carbon emissions? And so, these are constraints that companies are in the process of figuring out, and I'm not sure that anyone has the perfect answers, but I think we know that we're going to have to figure this out if we are going to be in a position to build the infrastructure that our customers need to meet their growing energy demand.
Awesome. A lot to unpack there. Sasha?
Lots to unpack.
Yeah, thanks. And thanks, Jeremy. And just really want to thank the Atlantic Council and congratulate them on pulling off what has been just a really remarkable couple of days of discussion and thought leadership, and really have enjoyed all of that. And, really to respond to your first question, ExxonMobil, we're a large globally integrated energy company. We are really looking at the global energy markets as they exist today and thinking about the future as well. And, a lot is changing. Just as, to build on what was just described by Marissa, it's a very complicated environment right now. Demand is growing, supply is being challenged by some really complex issues happening in certain parts of the world, and Iran in particular. And we're, leveraging our, global supply chain and optimization capabilities to try to continue to meet the demands of our customers. and are doing all that we can to maintain reliability of supply and affordability. And as we think about how priorities are shifting both from a policy perspective and from a commercial perspective, things are really converging on supply chain resilience and affordability. And I think that will drive the policy conversation as we look ahead. There are many things I think that we can do to enhance affordability and bring more supplies onto the market from a policy perspective, which I hope we can get into in the course of this discussion. But probably stop there in terms of framing remarks.
Awesome.
Yeah, Jeremy, thanks for having me, and thank you to the Atlantic Council. Just a quick background on Solstice. We are a very recent spin-off from Honeywell, and we are one of 3 uranium converters in the world outside of Russia and China that provides uranium hexafluoride for nuclear energy. So for us, to answer your question, what I think is so critical is recognizing the entire value chain as we try to solve for this dramatic increase in demand for energy. So a lot of talk this week about SMRs and new nuclear reactors. With that, we've got to make sure the supply chain is there when they come online. So for us, as we think about it and others in that supply chain, that partnership with the government as well as utilities, as well as the SMRs to align, to balance the market, to ensure that whole supply chain is there, is just critical for success in meeting the energy needs. And so having those conversations, having those partnerships is just critical for the infrastructure and the entire value chain and ecosystem for energy.
Thanks, David. Pete?
So thanks, Jeremy. Thanks to the Atlantic Council. When you're last in the queue, you got to find something interesting to say. I guess I'll start with a little bit of context for Enbridge. So where do we fit in the energy ecosystem? We're an energy infrastructure developer and operator. In North America, we move about 30% of the crude oil that's consumed on any given day. About 25% of the crude that exports the U.S. moves out of our export facilities in Corpus Christi, Texas. On the natural gas side, through our transmission and storage business, we move about 25% of the gas that's consumed in the U.S. On any given day. We also have a gas utility company that serves over 7 million customers in Ontario, Quebec, and Canada, in the U.S. and North Carolina, Ohio, Utah, Wyoming, and Idaho. And we have a renewable power business where we develop and operate onshore wind and solar, and we also have interest in offshore wind in Europe. So we're in the energy delivery business. These are capital-intensive assets, so we have to have a sense of the fundamentals, and our off-takers, our customers, have to have conviction about supply and demand where there's that imbalance, and we're seeing it today, as my fellow panelists and we've heard the last 2 days have underscored. That's a very strong investment signal in infrastructure. And as a result, across those 4 lines of business, we have $40 billion worth of projects that are in execution today that we'll put into service between now and 2029, another $50 billion of projects that are in development. And it's really across the board where we're seeing pretty strong interest in investment in that infrastructure. And part of it is, again, I look forward to the policy discussion, but if you look at the policy overlay over the last 2 decades, it's very much been, certainly in the context of electricity markets, it's been a conversation about replacement, and this is very much a reality bites moment in terms of the addition that's required. And so it's a uniquely challenging time, I think, for the energy value chain and for policymakers to catch up with those strong demand signals. But it's also a super exciting time to be in the energy space.
Yeah. An era of energy addition, no longer fighting over the same pie. You referenced the immense investment in projects in the pipeline at the moment. how are you wrestling with this moment on workforce, on materials, on supply chain related issues across the energy subsectors that you all are involved in?
Yeah, so one of the benefits of having that diverse sort of asset map and business units is that we're constantly engaging with large suppliers to ensure that we've got access to the necessary equipment and components to maintain what's a very robust and integrated system. The demand pull is pretty strong, and ensuring that from a logistics and long-term planning standpoint we have all that sequenced right is a challenge, but we have a very active and engaged supply chain and procurement team. The workforce challenges, again, I think part of this goes back to sort of the world that we thought we were heading towards versus the world that we're living in today, and the reality that the conventional energy space, the energy ecosystem, there are lots of opportunities. We have the benefit of operating throughout thousands of communities, and so it's important as repeat customers that we're active participants in those communities. And so we spend a lot of time with the trades, with vocational schools, trying to ensure that we've got the workforce to continue to maintain and operate that system, and that's proving to be ever more important given the strong demand signals. But it's a challenge, at least we see it as a challenge, and again, it's sort of that sequencing and pacing that you've got to get right, and some of that is also a function of, all right, you've got capital committed, when are you going to be in a position to deploy that capital and put people to work? And I'll just leave it there as a bit of a scene set for maybe a permitting question that's coming.
Maybe one last quick follow-up there. What bottleneck keeps you up the most at night? Like what are you really looking to dig in and get over the hump on?
So thanks for volleying it right back to me. I mean, so it's we have access to capital, we have strong counterparties, a lot of interest in the infrastructure that we can put into service. It's the lack of predictability in terms of the regulatory or political environment that we find ourselves operating in. And again, we're repeat customers almost everywhere. We operate in 43 US states, 8 Canadian provinces, 5 G7 countries, so we have to work in all sorts of changing political dynamics. But the lack of predictability and the durability around permitting decisions is a challenge when you think about how to allocate capital and how to ensure that, when you're looking across all those businesses and you're trying to figure out, okay, what makes sense in terms of the best risk-adjusted return when you're making 20, 30-year bets on incremental deployments of capital. If you don't have confidence in your ability to get from the beginning to the end of a permitting process and be in a position to not just deploy capital, but to bring those projects into service, I sleep okay, but if I didn't, that would be why.
I'm a broken record in this town. We can't have any conversation without talking about permit reform. So maybe dive right in there. But I do want to go back to David to talk a little bit about the nuclear dynamics too. But let's stick on permit reform. Maybe the single largest opportunity in this town over the next 7 months to get something across the finish line. Something each of you all are facing in some shape or form. The regulatory barriers, the lack of predictability. Maybe hear from all four of you a little bit on your priorities there. Why is this moment different, and why is it important that we get something that actually has an impact across the finish line? And Marissa, do you want to start?
Yeah, sure, happy to. So, look, I mean, as you all know, I mean, energy is absolutely critical to promoting economic growth and development, jobs, all those things that we all want. Growth of AI right now taking off immensely. The question here is, can you actually get the electrons that you need to power all of these data centers? But I think also important to recognize it's not just data centers. I mean, there's growth in electrification, EVs, all sorts of things. So it is a complex need that we have. There are two things that I think about, and obviously a lot of talk about permitting reform. If you sort of look at the sort of complexity of laws, regulations that exist, at least in the US, I heard someone actually say recently, it seems like our system is actually more so designed to stop things from getting built than it is to actually get things built. And look, I wish I had a magic bullet solution. I mean, I think if that existed, none of us would be here. But there's not. And so obviously there's going to have to be work across the federal government and the states to figure out, how we actually get things built and done in a responsible way. The other thing that I think about a lot is that I am not always sure that public sentiment is keeping up with, I think, the business community and industry's need for new energy and electricity. It's almost every day that you see a news article about a potential moratorium on data centers, resistance to pipelines, transmission lines, solar farms, you name it. Unless I think we can be aligned around the underlying need and importance for new energy supply, we're going to continue running into obstacles to actually prevent that infrastructure from getting built. So a lot of this comes back to how we engage with communities and help people understand just the extent to which energy and new electricity is so critical to powering, I think, the economic growth that I think we all are invested in for the future.
Yeah. Marissa, you make a critical point on the many of the environmental statutes that were established in this country were established to block bad outcomes back in the 70s and in many cases even before. We're in a different paradigm now, right? In fact, the regulatory structure is often blocking us from getting better outcomes, whether it's refurbishment or repairs on things or the build out of new generation and infrastructure that utilizes new technology and pushing forward. Maybe in DC, the thing that got the most attention recently was the sewage spill and the need to kind of step in and deal with that issue in our water system here. And so we've got to have a modernized process. Sasha, you are wrestling with this both at the federal and the state level.
Yeah.
A lot of it, Exxon's footprint has been dealing with this public perception issue as well that Marissa mentioned. You want to touch a little bit about how the company has been engaged in some of their public engagement and investments as you look to build, particularly in the Gulf?
Yeah, sure. We'd be happy to. And just to build on what you just mentioned, so we have a base business, oil and gas production, refineries, plastics, chemicals. We have a large footprint here in the U.S., but it is most definitely a global business. And when we look at all of the changes in this dynamic energy market that we are experiencing right now, there are a few truths that we are kind of sort of using as a basis for shaping our outlook. One is that the world will need hydrocarbons for many years and decades to come, and that natural gas is really very likely to be an important and growing source of energy no matter your policy outcome. And so we have a real commitment to increase our natural gas production across the U.S., also doubling our LNG facilities, and we have a low carbon solutions business, because not only do we need to produce more energy, we need to figure out ways to reduce the carbon impacts of the energy that we're producing. And so across all of those activities, permitting and public acceptance is a key gating item. And in the U.S. Gulf Coast, we own currently the largest CO2 pipeline network in the country and are building out a carbon capture and storage business against that pipeline that really goes more than 1,000 miles through Texas, Louisiana, Mississippi. We've got a number of commercial projects underway today and continuing to expand that work. But public acceptance and permitting are slowing us down. This is really sort of, I think, one example of how permitting reform could really unlock more energy supplies and decarbonization simultaneously. We need to get more Class 6 permits, which is the permits needed to inject CO2 underground. There has been progress on this front, but greater certainty of timelines for, really most importantly, would enable faster projects and more carbon to get taken out of the atmosphere. When we think about what else is necessary, it's really this predictability of the outcome that is most important, right? Ending frivolous lawsuits and other things that do sort of just slow us down. That would be helpful. But public acceptance, getting, as you were saying, Marissa, getting, I think, greater awareness and buy-in, not only at the community level, but within the stakeholder community, that really this is the time to build, and it's in our economic and our national security interests to move ahead here, and the outcomes on the other side will be better. The environmental outcomes, the economic outcomes, and we need to figure out a way to take advantage of this moment to get the policy at the federal level, permitting reform policy, across the finish line. What do I think is different now? I'd love to actually hear your thoughts on that as well. I know you're spending a lot of time on that. But I do think, the pressures from the outside system, not just what we're seeing geopolitically, but this real transformation in the energy markets here at home does create an opportunity, and this increasingly unified voice from the conventional energy industry, the oil and gas folks, the renewable energy industry, the environmental community for the most part, other stakeholders, everyone, not everyone, but many of stakeholders. The Venn diagram is aligning now around, let's get this done, let's increase predictability, speed of permitting, and let's get off to the races. And I think that pressure is starting to build, and this is the year to do it.
Yeah, this moment, at least in the last 20 years that
Yeah.
I've been in Washington, feels different than it ever has been, right? Policymakers coming together, all because there are shared outcomes they're looking for, whether
Right.
it's meeting this affordability moment, the need to drive and be competitive globally, invest in domestic supply chains, to deal with climate and reduce emissions or general environmental consequences. In the end, to solve those problems, we need to build more here, and so I think you're seeing this confluence of Republicans and Democrats in the administration want to come together and say, we need something that's durable here as well, right? We can't continue to have the pendulum swings across administrations. We need bipartisan, politically durable solutions. Pete, I wanted to ask you on the predictability question there too, on the judicial side, or what other areas across kind of the footprint of Enbridge do you see that is really critical to giving us these predictable regulatory structures?
Yeah, no, I think my fellow panelist hit it well. I think your point earlier around just sort of these underlying statutes that influence the permitting process, right, across what is for us a very robust regulatory framework that helps us demonstrate the prudency of the investments that we're pursuing. So you look at the National Environmental Policy Act, you look at the Endangered Species Act, you look at the Clean Water Act, in particular Section 401 or 404, and these are things that were designed a long time ago. The world has changed, and over time, all of those statutes have been interpreted differently by various regulatory bodies and judicial bodies, and so the idea that at a minimum Congress would step in and clarify the legislative intent, in particular, I know you've got Senator Armstrong coming out here in a bit to talk to folks, and this is something he's quite passionate about, having spent a good bit of his earlier career as a midstream operator. But when you demonstrate need, and I agree that you can't just demonstrate need in a regulatory context. It's super important that we be having that conversation throughout the value chain with those host communities, underscoring the need, the benefit at the end of the day of how sufficient investment in infrastructure is going to lower the delivered cost of energy and help create opportunities across regional economies. That's super important. When you've got a regulatory structure where you've clearly demonstrated need, you've gone through robust environmental impacts, there's certain statutes that are helping to determine or giving states or other stakeholders a role to determine, okay, how are we mitigating the impact of those federal decisions that have been demonstrated to be in the national interest or in the public interest, we've kind of lost track of kind of how to get from the beginning, middle to the end, and agree with Sasha that when you have gotten to the end of the process, you know, due process is important and stakeholders can seek redress, but that can't also be an endless process. And for us, if a permit has been granted and it's being litigated, if a court finds that there are things that need to be perfected or revisited, remand that to the regulatory agency. The idea of vacating duly authorized permits, again, capital goes where it's welcome, and that is not an open for business sign in terms of attracting necessary investment.
We have to get to yes or no ultimately, and put an end to the process and allow projects to move forward. Yeah, maybe no better advocate in the United States Senate than someone who has been the victim of this structure in the past, and Senator Armstrong. So I know I'm also looking forward to hearing from him later in this session. David, I want to turn it to nuclear, and maybe a good a signal to be sending in this permit reform conversation. We have had bipartisan policy over the last decade to modernize the NRC, to make the process faster to get through both building, operational licenses, and ultimately a review of new technologies. What are some lessons learned there? What are you seeing in the environment? You alluded in your opening the kind of nuclear takeoff that I think a lot of us are excited about, and we've been hearing about over the last couple days.
Yeah, and it's a common thread that you've heard. That predictability and certainty is so critical. But what we've seen is a bipartisan support, which we really haven't seen before, which is very exciting for nuclear energy. But I think the things that are important for us is as we continue to expand, you know, discipline in how that permitting is processed. There's great flexibility now in able to do that, but we have to recognize a longer term thinking, because for nuclear energy, you can't build a nuclear reactor overnight. You can't build an SMR overnight, although it's getting faster and faster. So I think the key thing is that public-private partnership is, what does 10 years look like, and how do we solve that today? Because there's enormous investment that has to be done, enormous partnerships. We have to eliminate frivolous lawsuits, so you make these hundreds of millions of dollars of investments. And then there's predictability in what that demand and supply chain looks like, so you can do those investments with certainty, and allowing that partnership on that permitting process, whether it's the NRC, DOE, those partnerships are just so critical, because you have to make it a win-win for everybody. And if you're only looking at parts of the supply chain, I think you could have some real challenges down the road.
Yeah. I mean, to ask you the same question I asked earlier of Pete, the supply chain, workforce-related issues, a constraint. I think it's something that the nuclear industry is concerned about. How are you all thinking about like being prepared for this moment?
Yeah, it's a great question. So we've been, as the only uranium converter in the United States, we've been doing it for 60 years. But if we rewind the clock 10 years ago, we had to actually shut down our plant because nuclear was going a different direction. And so restarting that workforce was a challenge. And there is an expertise that's needed in doing this. So we actually had to bring back some of our retirees. We were fortunate we were able to do some small manufacturing during that time and keeping things up and running. But now with the outlook we have, you know, the forecast we have out through the next 5 years being virtually sold out, we are now bringing in incoming talent to train and develop to make sure we're ready for the future. And that's why that certainty is so important, is as we make all these investments, it's important to know that the alignment's going to be there with supply and demand. But it's a huge investments that need to happen. You know, you have to have an expertise in dealing with nuclear energy. So building on that 60-year legacy and continuing to train and develop is crucial, and that certainty is going to be paramount as we move forward, as we expand demand in the future.
Yeah. Maybe shift the conversation to innovation policy and nascent technologies. Each of your companies trying to pave the way in individual sectors. You've got this administration looking at creative ways to finance, ways to partner with the private sector to bring new technologies forward and attract new private capital. What is needed out there to help catalyze some of these next generation technologies that can play a role in meeting this demand scenario while we continue to capitalize on what we can deploy today? Marissa, do you want to start on that front?
Yeah, happy to. So over the past couple of years, BP has invested significantly in some of the new sort of exciting lower carbon technologies. We've been shifting back to traditional oil and natural gas, but certainly not abandoning low carbon by any stretch. I think as Pete and I were chatting about earlier, a lot of this comes down to the customer demand signal and its a willingness to pay. And that I think is one of the key factors that we think about when it comes to investing in new technologies. There's a lot that we're continuing to do around things like biogas, biofuels. We're doing some sort of very early stage work around some geothermal opportunities. We're an investor in an advanced geothermal company called Ever. So there's a lot going on out there right now. Again, I think the question that we think a lot about is, with some of these new technologies, there is often a green premium involved. And I often say that, customers will typically pay a green premium if either they have to, they're forced by regulation or policy. Secondly, it's because it's a better, just cheaper alternative, which in that case doesn't even matter that it's low carbon, it's just cheaper and better and customers want it.
The ideal scenario.
The ideal scenario that ultimately I think we all would like to get to, because that's about making money and that's how you make some of these new low carbon technologies commercially viable. And then the third one is, some company will pay a green premium if it is in their self-interest to do so. And that comes down to things like they can get credit for it in their greenhouse gas inventory. I know Sasha and team are doing a lot of work with some of the new accounting frameworks out there to try to make it possible for companies to get credit for, paying extra for a green premium. So that is really, to me, I think, the question that we've got to solve for. And ultimately, in my view, I worked for a bank for many years. The more sort of financial engineering you've got to do, I think the more difficult it becomes to justify something for the long term. Fundamentally, you want the technology to work, and you want to find a way to mobilize that customer demand, get that customer sort of lined up for long-term offtake and supply. That's really important because you need the stability of revenues to then justify the debt financing in order to bring down the cost of capital. So it's pretty simple. But I think, obviously there's a lot that goes into, figuring out all those different steps. So obviously lots of different things that, governments can do, and we've seen, I think, some good examples of that. But I definitely think, and, coming back to a point that some others made on this panel, stability of signals from government, whether, again, it's around permitting, incentives, things of that nature are incredibly, incredibly important. Uncertainty is the worst thing for large capital investments.
Sasha, how about you? Low Carbon Ventures. What are you hearing from your customers and in some of the investments you're doing in the innovative space?
Yeah, thanks. Now, this is a topic near and dear to my heart, as you all know, or you may not know, but it certainly is. So look, it's very nicely summarized by Marissa. It's simple, but it's not easy, right? And so, we have a long history of innovation at ExxonMobil. We have a technology company still in existence today that's doing some enormous amounts of basic science, but also engineering and process design innovations to really try to improve what we can bring to the energy markets for our customers that lowers the cost of energy, provides different or new energy products, and reduces emissions. And that's really kind of the whole idea behind low carbon solutions, which is now one of our 3 global businesses, at ExxonMobil. So we're really looking across our capabilities and looking at the markets where they are today and where we think they're going to go to see, what we can contribute here technologically or from a project delivery standpoint to meet the dual challenge: more energy, less emissions. And there is a role for the federal government and for policy in helping to accelerate this whole process, right? I mean, we will do our part at ExxonMobil, bring forward the technologies, bring forward the capital and the project delivery capabilities that we have, carbon capture and storage. We have a low carbon hydrogen business. We've got a critical minerals business that's focusing on domestic supply chains for lithium and synthetic graphite that are key inputs into the battery supply chain here. And we have a lot of enthusiasm for that. Each of those different business priorities faces a different set of challenges. And helping, I would say partnering with federal policymakers in bringing forward those projects more quickly, either through enhanced permitting, so we can move more quickly and sort of lower our project delivery costs, maybe helping get initial projects started through sort of tax incentives or other subsidies. That's important in the early days to really help kind of demonstrate technologies or launch new industries. But ultimately, over time, we need to move into an environment where the markets reward what we're doing. Right? We do not want to be in a situation where, whether the goal is decarbonization or something else, the federal government is a financial partner in every project that's taking place, because that doesn't scale. It's not a good environment for business. What we want is to transition into a world where the markets value the product in a certain way. And when it comes to technology innovation, and I think what we're thinking about here is decarbonization or lower carbon, we believe at ExxonMobil that the answer is, over time, to create markets based on differentiated product intensity of carbon. And so we've been doing a lot of work on that, but I would say there's an enormous amount of potential to kind of rethink how we do carbon accounting to make it look more like financial accounting, track carbon through value chains. And if we're able to do that effectively, we can design policies that create markets that differentiate based on carbon and also on quality, also on price. And that could be a real unlock. Between here and there, I think the federal government can help in other ways. But in the long run, having those markets is going to be critical, because that's how corporations unlock their capital.
Yeah. David and Pete, can I ask you slightly differently? Like, I think we're wrestling with the short-term needs today versus investments that have to happen on the long term to meet what a projection that we think is a future in the era of demand that's not just here in the short term. How are you all wrestling? And what would be the single largest thing we could be doing in the short term? And maybe the second part is, what is the thing we can't afford to not do now for the long term?
Yeah, so really good question. So I think as we look at it right now, it's co-collaboration with our customers and with the government. So we are working with energy companies around the world, as well as SMR companies, saying, when are you going to commercialize and come up to speed? And typically, we have collaboration agreements that go 3 to 5 years. Together, we need to start looking at 10 to 15 years. So we can build as you are growing with you. So that collaboration with customers is so critical. So we're there together, and there's a certainty of supply. Concurrently with the government and the DOE and the NRC, it's got to be where are you working with energy companies, with SMRs, with all of this new nuclear capability, and how are you aligning and ensuring success throughout the entire value chain? So we need to do that right now, because these things take a couple years. So the discussion on permitting, expediting permitting, alignment, co-collaboration, co-alignment, recognizing the investments, all of that has to come together so everybody can be successful in solving this energy challenge. And nuclear is just a great way to go. And I'll just add very quickly, it worked very well when you think about the government and the AIM Act going from hydrofluorocarbons to hydrofluoroolefins, more energy efficient, lower global warming, everybody won there through that transition, and I know we can do the same thing with nuclear energy.
Pete, anything you'd like to add?
Yeah, I mean, I'll pick up on the themes of around innovation and optimization as well. I mean, you know, in North America, we have the benefit of a very robust and integrated energy ecosystem, right? Whether it's the pipeline grid or the electric transmission grid, it's also very mature. And so I think there's lots that we can do, and actually lots that we're focused on at Enbridge right now to squeeze more energy out of that existing system by operating it differently, leveraging technology, approaching challenges in a different way. You just think about our mainline liquids pipeline system, which moves about 80% of the crude that comes down from Canada to the U.S. refining complex. That pipeline network has been chock-a-block full for quite some time. Not super easy to permit linear crude oil infrastructure. But there are things that we can do and that we're pursuing that will allow us, by using chemicals and other technologies, changing out certain component parts where we're actually going to be able to move you know, upwards of 400,000 barrels of additional capacity you know, by 2028. And you know, these chemicals, it's just drag reducing agents that are reducing friction, polymers that we're moving inside the pipeline that are allowing more hydrocarbons to move through that existing infrastructure. So I think those are things that need to be embraced and pursued across the value chain, and there's a collaboration with regulators as well. You know, you used one of my favorite phrases, sort of the overlap in the Venn diagram. There's a lot that we can do. Sometimes regulation that was designed to ensure that, you know, assets are operating a certain way, well, they don't necessarily result in the most efficient or optimal outcome in terms of delivering more product at lower cost or with less intervention. And that's true on the electric grid as well. So I think there's lots that we can do in the short run to squeeze more value out of the existing system. And over the long term, it's permitting.
Permit reform. We'll always come back to the topic. Sure, we're going to get it done. We're going to get it done. Well, we are out of time, but I want to thank all four of you for being here for this robust conversation, and more importantly, excited to continue it off stage and find ways to partner and move the needle on things like permit reform, on innovation, and creating markets for these new products. So thank you all.
Thank you.
Appreciate it.